All right, hey guys, welcome back to Industrial Live. I'm Jeff Hine and excited for our video today. It's for anybody who's been looking to buy a property the past, say, 3 to 6 months and has found out that there are some serious slim pickings out there. So today I want to take a look at cap rates, interest rates, some other economic indicators to explain why it's been so difficult to find a good property, especially in the industrial investment world, and what the next, say, 3 to 6 to 12 months might look like based on where the economy is going right now. So first, we're going to take a look at interest rates. And this is Freddie Mac's interest rates, which is for residential, obviously. But what we're looking at here is the trend. If you see February in 2020, interest rates were between 3 and 3.5%. And now in 2021, they're roughly 2.25 to 2.75. So that's about a 75 basis point decrease in that 12-month span. So interest rates have gone down about 75 basis points. It makes a refi significantly more appealing, especially when you compare it to cap rates. And this is for the United States, warehouse. If we look at cap rates in Q1 of 2020, the average cap rate was a 6. And now where we're at least for Q4 2020, 5.9. So the average cap rate has only decreased 10 basis points, while interest rates have decreased 75 basis points on average. So if you're an owner and you're considering selling or a refi, suddenly a refi is looking significantly more appealing, while selling is only a little bit more appealing. So that's one reason there's less supply on the market. More people are opting to refinance. And the other thing that happens there is because people are not listing their property, because a refi is so appealing, there's fewer properties on the market. Now, for anyone else who is thinking of selling, suddenly there are fewer properties on the market and a 1031 exchange becomes more difficult. So you have other people who are hesitant to sell because they don't know what their 1031 looks like. And that's a self-reinforcing cycle, right? There's fewer properties on the market, it leads to fewer properties on the market. Now, if we take a look at the demand side of the equation, I thought that this article in the Wall Street Journal was interesting that shows in 2020, the American savings rate was $1.6 trillion higher than in 2019. Now, this is largely because, well, A, people weren't spending money going out, but also largely because of the government stimulus packages. People have more money to spend and they're not spending as much. So what does that mean? They have money to invest in real estate. And now we are looking at potentially another $1.9 trillion bill, which just as of this morning got passed through the Senate. Still has to get passed through the House, but that's going to result in more people having more money. Simultaneously, interest rates are low, money is cheap. People want to buy real estate, especially when the stock market's looking as crazy as it is right now with things like GameStop and AMC. So we're going to keep this video short today just to wrap things up. If things do continue, if the stimulus gets passed, people are going to keep having more money. You would expect that cap rates would compress to match a historical appropriate differential between cap rates and interest rates. Typically, you see cap rates 300 to 500 basis points above the 10-year Treasury. 10-year Treasury is in the low ones right now, which would mean that cap rates from a historical perspective should be in the low 4s to low 6s, while we're seeing the average cap rate at effectively a 6. So from that perspective, you would expect cap rates to compress. At the same time, though, there's a big caveat because with all of this money being injected into the economy, one thing we do risk is inflation. And if there's inflation, then cap rates are going to go up. So the shorter answer is I don't know where cap rates are going to go. I think probably in the short term, when the stimulus gets passed, they'll compress a little bit. Hopefully, it does not lead to inflation or runaway inflation, but we'll have to see. So, thanks for tuning in today, guys. Appreciate it. Let me know if you have any comments or questions, and look forward to speaking with you soon. Take care. Thanks.